I'll have a few, and when we finish, I'll have a few more things to add about him. Wally Weitz and Meryl Whitmer. And with that, you've got our all-star cast. And Ron, if you don't mind standing, I would like to point out that Ron, they finally got through an age director thing at Berkshire. I think we had 5 that were over 90 here not so long ago, but we put in the highest. Sue tells me anyway that it's the highest age limit that any of the companies she checked out came up with. But Ron has been on the board for 28 years and been associated with Charlie Munger at Munger Tolls for many years beyond that, and has been around at a variety of times of crisis and joy and disappointments and surprises and everything else at Berkshire, and has been of invaluable help to us. So I think I'd like to give a special hand to Ron Olson. Do something else that isn't done usually at annual meetings, but I haven't had a chance. I listened to him on Thursday afternoon. It's the only investment quarterly call that I listen to, but I listen to Tim Cook, and I understand, and it'll be tough for me to say it from up here, but Tim Cook, there he is. Somewhat embarrassed to say that Tim Cook has made Berkshire a lot more money than I've ever made Berkshire. And credit should be given to him for. I knew Steve Jobs briefly, and Steve, of course, did things that nobody else could have done in developing Apple, but Steve picked out Tim to succeed him, and he really made the right decision. Steve died young, as you know, and nobody but Steve could have created Apple, but nobody could, but Tim could have developed it like it has. So on behalf of all the Berkshire, there's a couple other people I'd like to thank. I don't do any work in terms of the show or anything else around Berkshire, but what you see today is the product of a lot of people at Berkshire. They forget, they don't think of themselves as the one who's supposed to screw a light in and leave for somebody else, specialists to come along and do other things. The people of Berkshire put on this show every year, and our chief financial officer and just everybody pitches in. It's a remarkable organization that way. But it's led this year, in the last few years, by Melissa Shapiro, and she's made this whole thing work. And then we got an idea a while back, many years ago. I'm thinking all the way back. Maybe 65 years ago, I met Gary Silva's grandfather and his wife. They had 9 children, and Susie and I joined a playhouse group. And I don't look like the kind of guy that would join a playhouse group, but it turned out to be a great move in many ways. First of all, I enjoyed the place, but beyond that, I met not only Carrie's grandfather, who ran an insurance company in Omaha, Bill Kaiser, but I also met the Bumpkin Boys, parents Rudy and Francis. So in one sort of accident, when I was in my 20s, came up with all kinds of good things. And in connection with Carrie, her father ran a company called Central States. And later on, we bought that company. And then her father ran the company. Her sister went to work for Berkshire some years ago, and then she decided to have a family and subsequently had 4 kids, so she left. But Carrie moved right in, and Carrie had amazing talent behind, just like a good many people do. They have talent you don't realize till you give them some responsibility. And so 10 or 11 years ago, I asked Carrie to do a 50th anniversary book about Berkshire and just use her imagination. And she didn't need to check with me or do anything. She never edited a book. She never published a book. She'd never dealt with printers before, but she just went out and promptly put together a book. And then this year, I let Carrie, of course, got married and had 3 kids, so she had to leave us, but we go to a baseball game once a year, and we invite some of our distinguished alumni like Carrie to join us. And Carrie, even though she was raising 3 children, and you may have met 1 or 2 of them in the last day or so, she volunteered to bring together a 60th anniversary book, and which I asked for. And again, she took the whole thing. She just did it. She kept doing the things with her kids, and every now and then I'd ask her how it was going, and she'd tell me how it was going. And so she put together the 60th anniversary book. And other than by, maybe a week before the meeting, because I gave her the assignment very late. And yesterday we sold, I think it was 4,000 plus, 4,500 maybe. 4,400. We printed 8,000. We intended to print 5,000, but so we sold 4,400 books yesterday, and we'll have roughly 3,600 left out there today. And it's kind of a whimsical but accurate, and she came out with just the book I hoped she would come out with. And then as we went through this publishing experience, Carrie wouldn't take a dime. I did get her to name her charity, and the Stevens Center, which takes care of homeless people, and does a great many other things. It's located about 5 or 6 miles from where we are here south. Has been doing a wonderful job. Her grandfather helped form it. Her husband's now joined the board, and we were selling 20 copies of, this is a commercial place, isn't it? We are selling 20 copies that we sold 10 prior to the meeting. That's all we let them sell. And we raised a few $100,000 doing that. I think we sold one for $100,000. signed them. But we saved 6 for yesterday, and the 6 brought $148, which is a pretty good average for a book of about $25,000. And then I had them save 4 more. So this afternoon when we disband at 1 o'clock, the area right behind us that has all the goods in it in the bookstore, they will sell the final 4. And when we get all through, I'll match whatever we've raised for the 20, and we'll give the Stephen Center a boost, both in financially, but also in awareness. And when you look at that book, Gary really did the whole thing. I mean, there's a lot of information in there, and she dug through it, and she came through a couple times maybe to check a fact or two. But she got material from the Munger family. She did a wonderful job, and I couldn't get her to take a penny for it. So I'm going to ask her to do a lot of other things in the future. Okay. With that, I think we've covered all the business. So we will move to Becky's questions that she's received from, I don't know how many she's received, but from all over the country and perhaps outside the country. And she's picked out a group of them, which she has not shared with me. And we will alternate questions between Becky and the audience, which we have by zones. And with that, I will turn things over to Becky for the first question.
No, I think it's Warren. This first question comes from Bill Mitchell. I received more questions about this than any other question. He writes, Warren, in a 2003 Fortune article, you argued for import certificates to limit trade deficits and said these import certificates basically amounted to a tariff. But recently, you called tariffs an act of economic war. Has your view on trade barriers changed, or do you see import certificates as somehow distinct from tariffs?
Yeah, the import certificates were distinct, but their goal was to balance imports against exports, and so that the trade deficit did not grow in an enormous way. In fact, it would have, and it had various other provisions in it to help third world countries at that time, as they were called, to perhaps catch up a little bit. They had a variety of aspects to them, but basically they were designed to balance trade. And I think you can make some very good arguments for the fact that balanced trade is good for the world, and the more balanced trade there is, the better. It will continue to be better. The cocoa will be raised in Ghana, and coffee and Colombia and a few things. And over time, the American industry has gone from being an agricultural country. This was nothing but an ag country. I mean, it's virtually, and that was only 250 years ago. And we have become a very industrial country, and we did not want to make that a situation, in my view, where we ran greater and greater deficits, building up greater and greater debts against the country. So I designed this import certificate thing, which Charlie thought was a little rude, too much like Rube Goldberg. I don't know whether that time the name is, but it's gimmicky. But it's certainly a lot better than anything I think we're talking about now. And there's no question that trade can be an act of war, and I think it's led to bad things. Just the attitudes that's brought out in the United States. I mean, we should be looking to trade with the rest of the world, and we should do what we do best, and they should do what they do best. And I don't think it. That's what we did originally. I mean, we were good at producing tobacco and cotton 250 years ago, and we traded it. And we want a prosperous world with 8 countries with nuclear weapons, including a few that are what I would call quite unstable. I do not think it's a great idea to try and design a world where a few countries say, ha, 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 we won, and other countries are envious. So my import certificate idea, which went no place, I think we've got extra copies, probably not a great demand for the copies. Anybody would like the office, I think we could probably send you a copy of it. But the main thing to do is not use, trade should not be a weapon. And the United States, we've won. I mean, we have become an incredibly important country, starting from nothing 250 years ago. There's nothing been anything like it. And it's a big mistake, in my view, when you have 7.5 billion people that don't like you very well, and you got 300 million that are crowing in some way about how well they've done. And I don't think it's right, and I don't think it's wise. I do think that the more prosperous the rest of the world becomes, it won't be at our expense. The more prosperous we'll become, and the safer we'll feel, and your children will feel someday. So that's. Don't expect my import certificate ID to go down Adam Smith's qualifications or anything. Okay. Let's go to Area 1.
Mr. Buffett, Mr. Abel, and Mr. James, good morning.
I would say that I'll speak for right beyond me, that in the next 50 years, and I hope it's funny things then, we won't give a thought to selling those. I mean, Japan's record has been extraordinary, actually, in terms of that. My guess is that Tim Cook would tell you that iPhone sales there are about as great as any country outside the United States. American Express would tell you that they sell their product very, very well in Japan. Coca-Cola, that we do business with, another investment of ours, they do extraordinarily well in Japan. They have a number of habits in a civilization that operates differently than ours. Japan is by far the biggest. The container they've always preferred for soft drinks, and they have a whole different sort of distribution system there. But we have been treated extremely well by the 5 companies. They talk with Greg primarily. I went over there a year or 2 ago. Greg's more cosmopolitan than I am, so he said, which isn't saying much actually, but he is. I don't know. How many times do you think he's met with representatives of one company or the other?
Yeah, when you think of the five, there's definitely a couple meetings a year, Warren, and I think the thing we're building with the five companies is, one, it's been a very good investment, but we are really, as Warren touched on, we envision holding the investment for 50 years or forever. But I think we also are building relationships to do incremental things with each of those companies. And we really do hope to do big things with them globally. They bring different perspectives and different opportunities, and we see, and that's why we're building that long-term relationship with them.
It's super long-term, and they have a bunch of, they have different customs, they have different approaches to business. That's true around the world, we don't have any intention in any way of trying to change what they've done because they do it very successfully, and our main activity is just to cheer and clap, and that I can still do at 94. We will almost. We will not be selling any stock. I mean, that will not happen in decades, if then. And my guess is that they will find things because they cover the world pretty much. The five trading companies. We will find things occasionally that may be very large for any individual company there. They may in some way be assisted by some help we bring to the situation. That will be an expanding relationship. It's too bad that Berkshire has gotten as big as it is because we love that position and they'd like it to be a lot larger than it is. But even with the five companies they're very large companies, and they're large companies in Japan. And we've got that market that in the range of $20 billion invested, but I'd rather have $100 billion than $20 billion. That's the way I feel about several other investments we have. But size is an enemy of performance at Berkshire, and I don't know any good way to solve that problem, but Charlie always told me that having a few problems was good for me. I never quite understood that, but if you listen to him moralize, you would understand. And it's not an impossible problem at all. And the Japan investment has just been right up our alley. You want to add anything on that, Skip?
No, I think you've touched it, but as you said, it's right up our alley, and I absolutely agree, Warren. I do believe we'll see some very large opportunities long term, and that's just been a great plus of that relationship.
Yeah, I would say they would like to present us with opportunities. We would like to receive them. We've got the money. We both get along very well with each other, and they have some different customs than we have. They drink the number one Coca-Cola product. They drink over there something called Georgia coffee. I haven't converted them to Cherry Coke, and they're not going to convert me to Georgia coffee. But it's a perfect relationship. I just wish we could get more like it. And I never dreamt of that when I picked up that little. Wasn't so little about that thick, but sometimes two companies to a page and a couple thousand pages, I believe. But it's amazing what you can find when you just turn the page. We showed a movie last year that a turn every page. And I would say that turning every page is one important ingredient to bring to the investment field. And very few people do turn every page, and the ones who turn every page aren't going to tell you what they're finding. So you got to do a little bit yourself. Okay. Becky?
This next question comes from Advait Prasad in New York. He writes, today Berkshire holds over $300 billion in cash and short-term investments, representing about 27% of total assets, a historically high figure compared to the 13% average over the last 25 years. This has also led Berkshire to effectively own nearly 5% of the entire U.S. Treasury market. Beyond the need for liquidity to meet insurance obligations, is the decision to raise cash primarily a de-risking strategy in response to high market valuations? Or is it also a deliberate effort to position Berkshire's balance sheet for a smoother leadership transition, providing Greg Abel with maximum flexibility and a clean slate for future capital allocation decisions? And I will add one line from another shareholder, Mike Conway, who asks, are you encouraged you may see some fat pitches coming your way?
Well, I wouldn't do anything nearly so noble as to withhold investing myself just so that Greg could look good. Now, if he gets any edge when I leave, I'll resent it. So the amount of cash we have is we would spend we came pretty close to spending $10 billion not that long ago, for example. But we'd spend $100 billion. I mean, those decisions are not tough to make. When something is offered with us that makes sense to us and that we understand and offers good value and where we don't worry about losing. And the one problem with the investment business is that things don't come along in an orderly fashion, and they never will. I mean, it isn't like every day. The long-term record is sensational, but that is not a product. And I've had 200 trading days times 80 years. It's 16 million trading days. It kind of, 16,000 trading days. It would be nice if every day you got 4 opportunities or something like that, and they were expected to be equally attractive. If I was running a numbers record, every day would have the same expectancy that I would keep 40% of whatever the handle was. And so the only question would be is how much was transacted. But we're not running that kind of a business. And so we're running a business which is very, very, very opportunistic. And Charlie always thought I did too many things. He thought if we did about 5 things in our lifetime, we'd end up better than if we did 50 and that we never concentrated enough. So that we would rather have, if we've got $335 billion now in treasuries, we would rather have conditions that are developed where we would have like 50 billion or something like that. But that just isn't the way the business works. And we have made a lot of money by not wanting to be fully invested at all times. And who knows what business is going to do tomorrow, next week, or next month, but they spend all their time talking about it because it's easy to talk about. And but it has no value. I've never found anybody I want to listen to on the subject. And On the other hand, I found that leafing through things like that big Japanese book that I can't eat anymore, that's a treasure hunt. And every now and then you find something, and occasionally, very occasionally, but it'll happen again. I don't know when. It could be next week, it could be 5 years off, but it won't be 50 years off. We will be bombarded with offerings that we'll be glad we have the cash for. And it'd be a lot more fun if it would happen tomorrow, but it's very unlikely to happen tomorrow. Very, very unlikely to happen tomorrow. But it's not unlikely to happen in 5 years. And then the probabilities get higher as you go along. It's kind of like death. I mean, if you're 10 years old, the chances that you're going to die the next day are low. You have to be 115 or something like that. It's almost a cinch. Particularly if you're a male. I mean, all the records are held by females in terms of age. And, I tried to get Charlie to have a sex change so he could test it. He did pretty well for being a male, I'll put it that way. Okay. Station 2.
Good morning, Warren, Greg, and Jim. My name is Jackie Han. I'm from China and now work in Toronto, Canada. This is my 8th Berkshire Hathaway meetings at this point. I've probably spent more time with you than most people spend on Netflix. As you might guess, coming from a Chinese family, we've always had a spot for real estate. So the real question isn't why don't you own a house? It's why are you still buying stocks instead of more property? So here's my question. With today's high interest rates and global uncertainty, do you still believe in being greedy when others are fearful? Or the value investing facing new challenges in today's environment? Thank you.
Well, in respect to real estate, it's so much harder than stocks in terms of negotiation of deals, time spent, the involvement of multiple parties in the ownership. Usually when real estate gets in trouble, so you find out you're dealing with more than an equity holder. But there have been times when large amounts of real estate have changed hands at bargain prices, but usually stocks were cheaper, but they're easier to do. So Charlie did more real estate. Charlie enjoyed real estate transactions, and he actually did a fair number of them in the last 5 years of his life. But he was playing a game then, and it was an interesting game to him. But I think if you'd asked him to make a choice when he was 21, he had to either be in stocks exclusively the rest of his life, or lose the rest of his life, he would have chosen the stocks in the second. There's just so much more opportunity, at least in the United States. There's so much more opportunity that presents itself in the security market than it does in real estate. And in real estate, you're usually dealing with a single owner or a family that owns maybe a large property they've had a long time. Maybe they've borrowed too much of money against it. Maybe the population trends are against them. But to them, it's an enormous decision. When you walk down to the New York Stock Exchange, you can do billions of dollars worth of business totally anonymous, and you can do it in 5 minutes. And the trades are complete when they're complete. In real estate, when you make a deal, a big deal with a distressed lender, when you sign the deal, then you go into another phase. I mean, then people start negotiating more things, and it's a whole different game. And a different type of person, to some extent, enjoys the game. We did a few real estate deals that came our way in 2008 and 9, but the amount of time that they would take us compared to doing something intelligent and probably better in securities, there was just no comparison. I mean, in a real estate deal, every sentence is as important to the person, and in stocks, if somebody needs to sell 20,000 shares of Berkshire or something, and they call us and the price is right, it's done in 5 seconds, and it closes all the time. People who you certainly wouldn't want to have marry your daughter, or they behave well, actually, in stocks. Partly that's because they're probably having their wires or phones or whatever it is recorded as to what they've said and everything. but the completion rate for working on anything in stocks is, if assuming you've got a meeting of the minds on prices, essentially 100%. In real estate, it just begins when you agree on deals, and then they take forever. So for a guy 94, it's not at the most.
Berkshire Hathaway owns. There was one that you acquired, the Chicago-based company Portillo's Hot Dogs. How did you know that this would be a good fit for the overall company's portfolio?
Well, I'll have to ask Greg about that because I don't know anything about it. So maybe he's going to want to looking
I think I gotta call a friend on this one.
Yeah, we own a lot of companies, but I do like to think I know most of them, but it may be a subsidiary of a subsidiary in some way, but I really don't know anything about it. I'm sorry, but that may be a good thing. I do know something about hot dogs, though, so
Yeah, we do have a lot of companies in Chicago, Warren,
Yeah.
through Marmon, and that's been a great opportunity where we've accumulated a variety of excellent companies under that portfolio. But as you noted, I don't believe Portillo's falls under that.
No, I look at the financial statements of about perhaps 50 or 60 of our companies every month. But in the case of Marmon, for example, Marmon itself owns over 100 companies, and it was created by Jay Pritzker and his brother Bob, and it was a remarkable company when we bought it, but it was highly diversified already, and then we diversified it further. So it is something of a Berkshire within Berkshire tax purposes. And the Rockwood Chocolate Company went into on the LIFO message, so they owned like 30 million pounds or thereabouts of cocoa. And then cocoa took a run in 1955, and I just moved to New York. And there was a provision in the new tax code that if you were in 2 or more companies, and you did certain things, and you'd been in them for 5 years, and you got out of one of them, that there would be no capital gains tax on LIFO inventory gains. And the tax rates were around 48%, maybe 52%. And so there was this huge profit because the cocoa had gone up in price, but that made it terrible for them in selling Rockwood chocolate bits because the price of retail of the chocolate bits did not match what was going on at wholesale. Something almost identical has been happening in the chocolate business. Recently, Hershey Chocolate just came out and said they're going to have a bad quarter, and we're paying $4.50 a pound for chocolate that from cocoa because things are going on in West Africa that make cocoa prices go up dramatically. In any event, Jay Pritzker bought control of Rockwood, the chocolate company. And like I say, I was 24 or 5 years old, and they called a meeting to split off one of the chocolate businesses in a way that would enable them to recognize the gain on these cocoa beans without paying roughly 50% federal taxes on the gain. So I went to the meeting, which was in Brooklyn, and nobody was there. This is in the Turn Every Page Again.
And the resilience of the United States, and history has proven you correct. Today, the U.S. appears to be undergoing significant and potentially revolutionary changes. Some investors are now questioning the concept of American exceptionalism. In your view, are investors being overly pessimistic about the U.S. economy, or is the country indeed entering a period of fundamental change that requires a reassessment from a new perspective?
Well, I would say that Jessica, who I believe it sounds as if she is the step-granddaughter of one of our managers that I mentioned in the annual report, may not be the same. But in any event, America's been in significant and revolutionary change really ever since it was developed. I mentioned that, we started out as an agricultural society. We started out as a society with, if I were being born today, I would just keep negotiating in the womb until they said you could be in the United States. So we're all pretty lucky. We've got two non-United States guys here just to get the other side.
We now live in the U.S.
Okay, station 4.
Next is Station Army.
Hi, Mr. Buffett. My name is Daniel, and I'm from Tenafly,
Was it
New Jersey.
cold already?
First of all, I
Was
just
it
want to
cold?
say how
Ready
grateful
to ask
I
the
am
question?
for getting the opportunity to ask you a
we
question.
missed it.
When it comes to your principles of investing, you often talk about how
Oh, I
important
missed Tim
it is
Cook.
to be patient. Has there ever been
I wanna
a
throw
situation
penny
in
and
your
yeah,
investing
but it might
career
jump
where
to that.
breaking that principle and acting fast has benefited you? Thank you.
Well, that's a good question, and there are times when you have to act fast. In fact, we made a great deal of money because we wasn't that faster than anybody
We look at this.
around.
Can you also
Just
just in
in terms
case to
of-
see some?
I think she's the stepdaughter or step-granddaughter of Ben Rosner, a manager of ours. And in 1966, I got a call from a fellow named Phil Steiner in New York, and he said, I represent Mrs. Annenberg. And there were actually 9 Annenberg sisters, I believe, before I became known as the son. But he said, we have a business we'd like to sell you. So I called Charlie up, and I got a few details, and it sounded very interesting. And Charlie and I went back to the office of Will Steiner in New York. Was a marvelous guy. Never met him since, but he was handling things for Mrs. He signed that her name was Annenberg, and her husband had been the partner of Ben Rosner, but he had died, and Ben got kind of tense about working with her, and so he offered us this business at a bargain price. He offered us a business for $6 million. It had $2 million in cash. It had a $2 million piece of property and a 900 block Muscatine Street in Philadelphia, down there, Market Street. And it was making $2 million a year pre-tax, and the price was $6 million. And Charlie and I went back to this place, and Ben Rosner was there, and he just was upset about doing business with his partner's widow. She was extremely wealthy, and I just he wasn't enjoying it. He was very nervous about selling it, and he said to me and Charlie, he said, I'll run this business for you until December 31st, and then I'm out of here. And I got Charlie, we went down the hallway, and I said, if this guy quits, you know, he can throw away every book on psychology I've ever read. And so that began a wonderful, we bought the company and had a great relationship. And did I know that morning when I got a phone call from Will Felsteiner that is back roundabout? I've had a couple of times, and that was one of them, where people in the East felt that they had a stereotype in their mind of what people from the Midwest were like. And Ben had been married, his first marriage was to a woman from Iowa, and he just figured that anybody from the Midwest was okay. And the trick when you get in the business with somebody, or get in a room with somebody like that, and they want to sell you something for $6 million, and it's got $2 million in cash and a couple million in real estate, and it's making you $2 million a year. You don't want to be patient then. You want to be patient and waiting to get the occasional call. My phone will ring sometime, you know, with something that, you know, wakes me up. I may be sleeping in there or something. You just never know when it'll happen, and that's what makes it fun. So patience. It's a combination of patience and a willingness to do something that afternoon if it comes to it. You don't want to be patient about acting on deals that make sense. And you don't want to be very patient with people that are talking to you about things that will never happen. So it's not a constant asset. It's not a constant liability to be patient. Right here.
Well, Warren, I was going to add, as you're being patient, I happen to know, and I think that goes for Ajit also and all our managers, very patient when we're looking at opportunities, and as you touched on, we want to act quickly, but while we're being patient, never underestimate the amount of reading and work that's being done to be prepared to act quickly. Because we do know, be it equities, but I would include a variety of private companies, when the opportunity presents itself, we're ready to act. And that's a large part of being patient, is using it to be prepared.
Yeah, and of course it doesn't come in anything like an even flow. I mean, most uneven sort of activity you can get into, and the main thing you have to do is you have to be willing to hang up after 5 seconds, and you have to be willing to say yes after 5 seconds, and you can't be filled with self-doubt in the business. Just forget it. It don't work. Go into some other activity. But you also, I mean, one of the great pleasures, it is the great pleasure actually in this business, is having people trust you. And that's really the, why work at 90 when you've got more money than anybody can count? You know, they started the day and having machines that are helping them and everything else. It means nothing in terms of how you're going to live or how your children are going to live or anything else. But both Charlie and I, we just enjoyed the fact that people trusted us, and they trusted us 60 years ago, 70 years ago, in partnerships we had. And we never sought out professional investors to join our partnerships. Among all of my partners, I never had a single institution. I never wanted an institution. I wanted people, and I didn't want people who were sitting around and having people present to them every 3 months and tell them what they wanted to hear and all that sort of thing. So, and that's what we got, and that's why we got this group here today. So it's all worked out. But then, it's, you don't want to be patient when things are going your way. When the time comes to act, you want to get it done that day. Okay, Becky.
This question is from Flavio Montenegro, a shareholder from Guatemala. A couple of years ago in this meeting, Mr. Jane outlined the significant challenges GEICO faced in modernizing and integrating its IT systems. It was also mentioned that competitors were ahead in their pricing strategies because of the use of telematics. Today, GEICO's turnaround is evident through strong pricing and operational improvements. Could you provide more details on the specific actions taken under Todd's leadership and how those changes will help sustain the long-term competitive advantage in the coming years?
Yeah, Todd has done a great job for us in terms of turning around the operation. When he took over, there are two major issues that GEICO was behind its competitors of. Firstly, the term Warren used, and we all have been using, is matching rate to risk. And secondly, telematics. We were at the bottom of the list in so far as telematics has learned about 5-6 years ago. Since then, we have made rapid strides, and telematics, which used to be a source of competitive disadvantage to us, is no longer so. And I would argue that our telematics at GEICO is not as good as anyone else's today. So that's been one huge catch-up. Secondly, in terms of matching rate to risk, there again, I think we have caught up with our competitors, and they're as good as anyone else in the field. All this together with the cost reduction effort that GEICO and Todd gets a lot of credit for, he has basically reduced the workforce by 20,000, starting with something close to 50,000. He's brought it down to 20,000, and that translates to, I guess, at least $2 billion per year. So all this has allowed GEICO to become a much focused competitor. So much so, in the last 7 quarters, GEICO has shown a combined ratio that has an 8 in front of it. And I never thought I'd live to see the day when anyone could have a combined ratio as so low as it is right now. So I think GEICO has done a great job. Its 80 combined translates to the largest profit anyone is making on the underwriting side in personal automobiles. So, we've achieved a lot, Todd has achieved a lot, but I do not want to be so arrogant as to say that mission accomplished. We've achieved a lot, but I still think we need to do a lot more in technology. AI, as we talked about, is going to be a big force, and we need to catch up there. Not catch up, but we in the state of readiness. So I think we're in a great shape right now. Where you would add anything?
No, it's a fascinating case study, but that's what's so interesting about the whole business, particularly about our businesses, is that each one is a little different, but they all have challenges of certain sorts, and they also certain numbers have opportunities. We paid $50 million for half of GEICO in 1976, which turned out to be half of GEICO. $50 million. $50
Just get those two.
No,
Get the
100%, but 50% of $2 billion that we earned in the first quarter, $8 billion. It's on a $50 million investment. It's, you know, 20 for one and a quarter. And so it, you know, that takes years to develop. But the interesting thing is, the auto insurance policy, which didn't even exist 100 years ago. It just, well, I should say 120 years ago. It's by far the largest item in the property casualty insurance business. It's huge.
The only thing I'd like to add is, in addition to the underwriting profit, Geico provides $29 billion.
Oh, yeah, in addition, yeah. And that's not unimportant. When you paid $50 million to get the businesses, it's giving you $29 billion to work with for nothing. And on top of that, gives you $1 billion of profit in a quarter. The interesting thing about auto insurance is that we're the company we started in 1936. We're selling the same product as 1936. We're being more sophisticated about pricing it than we were then. Somebody just made the judgment, a fellow that came from USAA, made the judgment that government employees, the name Geico stands for Government Employees Insurance Company, that government employees were better drivers than average. And I don't think he was an actuary or anything else, he just made an observation. And so he left USAA, which is still a very successful company, and he started Geico for $200,000. And he made money the first year from underwriting. He made money the second year. This is not a public offering type thing. You know, he's only accounting for 10 years and all that sort of thing. He just priced it to make money. And that's exactly what's been done since 1936. The policy really, you know, your auto insurance policy looks a lot like the one that we had. And this huge field has sprung up around us, and it's still growing. And of course, nobody likes to buy insurance, but they sure like to drive. Geico is it's a fascinating story. About 3 times over the years, the company has gotten sidetracked one way or another, and then it gets back to its basics and wonderful business. And we showed this annual meeting one time a message to the warmer builders.
Sorry, thank you.
January 19th.
Sorry about that. Thank you. Sorry.
I'd gone down on Saturday to visit, but turned out they didn't work on
Thank you.
Saturday. Washington.
Yeah, so
Finally, a janitor was there. And I said, "Janitor, is there anybody else I can talk to here except you?" And he didn't take it personally, and he said, "One guy went 6 floors."
I already get the bottle. I went there. It's okay. It's okay.
That's for you or for?
Because I'm wearing mask. It's okay.
And we got him on the board of Berkshire. You know, you take Tom Murphy and Sandy Gottesman, Walter Scott, Bill Scott. One thing we've done is we've held on to human assets. We think like assets out of people. The right sort. And incredible talent, but also and you know, get a chance to talk to a longer day.
Chloe.
On Saturday afternoon, you just listen carefully. And that comes to me. And the category of turn every page. Some of them want to turn pretty fast, but
This next jacket.
want to take advantage of it.
Go ahead.
Okay, Station 5.
My name is Benjamin Graham Sanderson from Pasadena, California. Warren, thank you for all you've taught us. Earlier you said nobody but Steve Jobs could have created Apple, but nobody but Tim Cook could have developed it. Warren, nobody but you could have created Berkshire. And I presume you view Gray as an outlier among outliers. But he seems so normal. So I was hoping you could share what specifically about Gray makes him your preferred successor. And Greg, we're excited to get to know you over the next few months.
You've hit on the most important question, and now in terms of the business, we got a wonderful group of businesses. We got to build the things we don't build, which is hard to get in capitalist systems. You know, things that I mean, imagine being able to create something, you know, very, very, very big portion. Very, very hard to develop it in one time. You develop people, let alone the capital position, the history and everything else. And the answer, of course, is it does take a long, long time. And it takes getting around to a small cadre of people, which then spreads out somewhat. You got mutual trust, where people do more than their share. And I've been around a lot of businesses over the years. And by nature, I'm somewhat critical of everything. I mean, I'm looking for what's wrong in things. That's part of investing. You know, what are you missing? But we have, you know, we've got people with, if they're asking, put on a show like this instead of doing whatever the regular crowd is, they participated. We went around to rooms of people who were exhibiting yesterday for an hour and a half. And these are people who are thanking me, you know, and totally enthused about coming and doing a lot of work for us. They don't get paid anything yet. I don't know anything about the arrangements the individual companies make, but they work hard and they enjoy their work. And you know, you really want to work with something you enjoy. I've always had, I've had 5 bosses in life, and I like every one of them. And they're all enjoying it. So it's something that I'd rather work for myself than anybody else. But find people who are wonderful to work with. That's the place to go. And I told my kids that. You don't get lucky like I did when I found 7 or 8 years of age with the industry. You know, could have taken a lot longer, but you want to find the song, find the sound was called Another Story, and Miller went on from having a broken down band for 15 years. Coming up, found the sound, and created the first gold record. I don't know whether you know what it was, but it was the Chattanooga Choo Choo, and in 1941, I think it was. And he took her out from being a nothing, and with the band that he had, till he found the sound, and you know, since then, their sound isn't my sound, but and you don't find it necessarily on the first job you take. You gotta eat, you know, but get lucky like I did, you find them when you're very and then, just keep doing it, and don't worry too much about starting salaries. Don't worry about be very careful who you work for, because you will take on the habits of the people around you, so there's certain jobs you shouldn't take. And, but it's the greatest country in the world, and we've got the greatest time in the world, so, I would say that well, I'm handing this over to Larry, you can't even dream all the dreams that you could have about a place like this. Not at all. But you can have to do though, it's all it is. I'm sure it's like the next day. In terms of financial activities on a meaningful scale, okay? You don't want to go, there was a book about what we remember that book, you only have to get rich once. I mean, you don't want to do anything at risk. What's been created. So, it's very stupid things are happening around you. You don't want to participate. People are making more money because they're borrowing money, or they're participating in securities or pieces of junk, but they hope to find a bigger sucker later on. You just have to forget that. That'll bite you at some point. And the basic game is so good, and you've been so lucky to be born now. I mean, if I've been born in 1700, I'd say, I want to go back in the womb, what the hell with this? It's too hard. But now I've come along to do something where I can just play around all day with it, and I enjoy doing it. It's really, it's a pretty wonderful life. Anything, Greg, you want to add or subtract from that?
Nothing to subtract, but I would always just say it could be more, as I've said in the past, more humbled and honored, obviously, to be in this role. But to have actually been part of Berkshire for, Warren, it's now 25 plus years, had the opportunity to be part of Berkshire and to work with you and Ajit and our board, but many other people in our company. And as you touched on, when you find something like that, you find something like that, like Berkshire, that's so special, you fall in love with it, and it becomes just what you want to do every day. It's just an incredible opportunity, so thank you.
And the gentleman who asked the question, if you don't find it immediately, don't starve to death or anything in the meantime, but you will find it, and you'll find it in the right individual. In a sense, it's somewhat like finding the right person in marriage. I mean, probably the first, some of you may have married the person you met on your first date, although I guess they don't even have dates anymore. But and sometimes it pays the way too. Okay, Becky.
This is a question from Mark Bonke and Helen Friedrichsen in Rapid City, South Dakota. As the U.S. dollar quickly loses value in relation to other foreign currencies in 2025, is Berkshire Hathaway taking steps to minimize this currency risk and its impact on quarterly and annual earnings? If so, please explain. And I'll just add from Mary Chang, another shareholder, Berkshire currently borrows in Japanese yen to offset its currency risk and its Japanese stock investments. In the future, will you invest in foreign currency denominated assets unhedged?
Yeah, well, we always have, pretty much. The Japanese situation is different because we do intend to stay so long with that position, and the funding situation is so cheap. we essentially have attempted to some degree to match purchases against yen-denominated funding. But that's not a policy of ours. In fact, it's the first time we've done that, and we've owned lots of securities in foreign currency. So we do nothing in terms of the question about its impact on quarterly and annual earnings. We don't do anything based on its impact on quarterly and annual earnings. I mean, there's never been a board meeting, I can remember or the conversation I had with Charlie when I said, if we do this, our annual earnings will be this, and therefore we ought to, whether it's accounting or whether anything, we just, the number will turn out to be what it will be. What counts is where we are 5 years now, and if you start focusing on what number you're going you will quickly get tempted, at least based on the experience I've seen in 20 companies. You will get so you will, one way or another, play around with the numbers, and sometimes seriously play around with the numbers. And I've seen people that I trust them in all kinds of other ways, but they regard playing around with numbers is perfectly okay. And that's just not something, we just don't think about that. So, actually, the yen relationship with the yen in the last quarter, resulted in certain gap charges. But it doesn't make it different if we change that, next month or next year. And obviously, we wouldn't want to be owning anything that we thought was in a currency that was really going to help. And that's the big thing we worry about with the United States currency. The tendency of a government to want to debase its currency over time. There's no system that needs that. Pick representatives, you can do anything, but the people, there will be a push toward weakening currencies. Of course, that is, I mentioned very briefly in the annual report. Fiscal policy was very in the United States. It's made the way it is, and all the motivations are doing a lot of things that could cause trouble but that's not limited to the United States. It's all over the world. Some places it gets out of control regularly. They devalue it, rates are breathtaking, and that's contingent. I mean, people can study economics and you can have all kinds of arrangements, but in the end, if you've got people that control the currency, you can issue paper money and you will, or you can engage in living currencies like they used to do centuries ago. And there will always be people. It's the nature of their job. I'm not thinking them out as personally evil or anything like that. But the natural course of government is to make the currency worth less over time, and that's got important consequences. And it's very hard to build checks and balances into the system to keep that from happening. And we've had a lot of fun here in the last, either the first 100 days or the last 100 days, whatever you want to call it, watching what happens when people try to make sure that our coming fiscal risks and that thing isn't over, never will be over. You know, for now, if you look up and search the great inflations of post-World War II, it's just a list that goes on forever, and the same names keep popping up and everything. So currency is, value of currency is a scary thing. And we don't have any great system for beating that. We do in this particular Japanese position. We expect to hold them for 50 or 100 years or more. And we will be owning something that's denominated in yen, easily predictable, as long as the carry-on is right. We'll attempt to issue Japanese denominated liabilities, but that's not because of anything we carry around.
I was just gonna say that, relative to the question, that there's no question that we were fundamentally very comfortable with investing in the 5 Japanese companies and recognizing we're investing in the yen. The fact we did that borrowing then was almost just like a nice incremental opportunity. But we are very comfortable both with the Japanese companies and with the currency we would ultimately realize, i.e. in the yen.
You know, we only made, as I referred to earlier, one big currency play, which was connected with when I wrote that article for Fortune. We got long 12 other currencies, as I remember, only 4 or 5 of them were really big currencies. That's when I say we got long, and that now we're short the dollar, and so we held that position for a couple of years. We made several $1 billion on it, which was significant to us, and still is. Charlie always felt that if you had to pick an area outside of stocks in which to invest, and he knew a lot about bonds, he knew a lot about real estate, he knew a lot about marketing. He said he thought he could make a lot of money out of being in foreign currencies. We've done it once. It's not inconceivable we would do it again, but it's unlikely. But there could be things happen in the United States that would make us want to own a lot of other currencies. And I suppose if we made some very large investment in a European country or something, there might be a situation where we would do a lot of financing in their currency. It's not it was something that just was sort of obvious to do in the Japanese situation where we had the ability to borrow at a very, very low carrying cost. And we felt very good about the income we'd be receiving from these securities. In the present condition, which is born, I mean, it never does prevail for decades and decades. We did all we keep doing the same sort of thing. We exchange it a little too. Don't take that as an opportunity. Okay. Section 6.
Good morning, Warren and Greg and Ajit. Thank you so much for hosting this event. Good to be here. My name is Dashboyu Victor, and I'm from the great country of Mongolia. A little bit background about my country. Mongolia is an emerging market and landlocked country sandwiched between Russia and China. But we are rich in history and minerals, and have full democracy and growing economy. Last week, we hosted our second annual Mongolia Investor Conference in New York to attract investors like yourself. I know you even give advice informally to government leaders such as South Korea, China, and India. What advice would you give to government business leaders of emerging markets like Mongolia to attract institutional investors like yourself? It'd be great if you have long-term plans for exposure to emerging markets as a hedge or an opportunistic investment. Lastly, I welcome all of you to Mongolia, and my country folks would be very happy if you can make it to our economic forum this July.
I have trouble planning a trip to Council Bluffs, which you took. He's an optimist. Actually, I met a fellow here at the annual meeting, probably 20 years ago or more, who did a lot in Mongolia. And
You just put this under my seat, yeah.
Mongolia, and actually moved there for quite a while. I would say that if you're looking for advice to the government over there, develop a reputation for having a solid currency over time. I mean, we don't really want to go into any country where we think there's a chance, a significant probability of runaway inflation. It's too hard to figure. Other people figured out ways to make money in hyperinflationary situations, but that's not our game, and I don't think I'd play it well. So we wouldn't be. That would be a factor with us. The chances are we won't find anything in Mongolia that fits our size requirements aside from that. But like I said, my friend that I met here 20 years ago has done very well in Mongolia. And if the country develops a reputation for being business friendly and currency conscious, I think that bodes very well for the residents of that country, particularly that have some other natural assets that they can build around. I don't know that much about the minerals or I mean, who would have bet on the United States? We didn't have to have perfection, which is that the other guys for quite a while, and we started out with nothing, and we ended up with close to 25% of the world's GDP and fastest growth rates, and generally somber currencies, and all kinds of things. So I wish you well. Okay, Maggie.
This question's from Peter Shen in New Jersey. It's for Mr. Buffett and Mr. Jain. In recent years, large private equity firms like Blackstone, Apollo, and KKR have aggressively expanded into insurance, raising permanent capital, managing float, and aiming to replicate the model that Berkshire pioneered decades ago. Given that these firms are now directly competing for insurance assets, often using higher leverage and more aggressive investment strategies, how do you view their impact on Berkshire's insurance operations and underwriting discipline? Do you believe that the private equity model poses risks to policyholders in the broader financial system? And has this competition made it more challenging for Berkshire to find and price insurance opportunities safely and profitably today?
Yeah, one of the question is very easy. there's no question the private equity firm come into the space, and we are no longer competitive in this space. We used to do a fair amount in this space, but in the last 3-4 years, I don't think we've done the same thing. Now, you want to separate this whole segment in two separate segments. One is the property casualty end of the business and the life end of the business. The private equity firms that you mentioned are all very active in the life end of the business, not property casualty end. You are right in identifying the risks in these private equity firms are taking on, both in terms of leverage and in terms of credit risk. And while the economy is doing great and credit spreads are low, the private equity firms who've taken the assets from very conservative investments, and I wouldn't say high octane, but they've certainly invested these assets in situations where they get a lot more return on the investment. And as I said, as long as the economy is good and credit spreads are low, they will make money, they'll make a lot of money because of leverage. However, there is always a danger that at some point the regulators might get cranky and say, you know, you're taking too much risk on behalf of your policyholders. And that could end in tears. We do not like the risk reward that these situations are, and therefore we put up the white flag and say, we can't compete it in the second way.
Yeah, I think there are people that want to copy Berkshire's model, but usually they don't want to copy it by also copying the model of the CEO having all of his money in the company forever. And I mean, they've got a different equation. They're interested in, you know, and that's capitalism, but they have a whole different situation, and then they probably have a somewhat different fiduciary feeling about what they're doing, and sometimes it works, and sometimes it doesn't work, and if it doesn't work, they go on to other things. And if what we do here at Berkshire doesn't work, I spend the end of my life already what I've created, so it's just a whole different personal equation, and there's no property casualty company that can basically replicate Berkshire. That wasn't the case at the start. I mean, at the start, we just had National Indemnity a few miles from here, and anybody could have duplicated what we had. But that was before G. and G came with us in 1986, and at that point, the other fellows would have given up.
Yeah. What's that,
Station 7, please.
Hi, my name is Marie. I'm from Northern Massachusetts. Thank you for the time today. As a young person interested in investing like myself, I would love to hear your insights, Mr. Buffett. What were some pivotal lessons you learned early in your career, and what advice do you have for young investors who are looking to develop their investment philosophy? Thank you.
Well, those are good questions. I wish I thought of them myself earlier in my life. Who you associate with is just enormously important. And don't expect you'll make every decision right on that. I mean, but you are going to go into, you're going to have your life progress in the general direction of the people that you work with, that you admire, that become your friends. I mentioned a few fellows that died in the last couple of years ago. All of those people were people that we were working together on something 1/10,000th the size of Berkshire. I mean, they're the kind of people you choose. They're people that make you want to be better than you are. And you want to hang out with people that are better than you are, that you feel are better than you are, but you're gonna go in the direction of the people that you associate with, and that's something you learn, and of course you learn it late in life, that it's hard to really appreciate how important some of those factors are until you get much older, but when you've got people around you, like Tom Murphy and his name is Sandy Gottesman, or Scott, you're just going to live a better life than you do if you just go out and look at someone who's making a lot of money and decide you're going to try and copy him or something of the sort. So I would try to. I try to be associated with smart people too. I could learn a lot from them. And I would try to look for something that I would do if I didn't need the money. I mean, what you're really looking for in life is something where you've got a job that you didn't need the money, and I got that. Joey had it for a very, very long time. In fact, all the folks had it. And they also, every one of those ones I named, they always did more than their share. And they thought, like, we never saw more than their share of the credit. They just behaved the way you like anybody. You work with them. When you find them, you treasure them. And when you don't find them, you still keep doing whatever causes you to eat, or makes you be. But you don't give up on looking around, and you'll find people who do wonderful things for you. I mentioned earlier, going down to Geico and knocking on the door when the door was locked. I mean, who knows what was behind that door when in, but only 10 minutes I found that I had a man that was going to be just wonderfully helpful to me, and of course, if somebody could be helpful with you want to try to figure out ways to be helpful to them. So you get a compounding of good intentions and good behavior. And unfortunately, you get the reverse of that in life too. And with a lot of, I was lucky in having a good environment for living that kind of a life, and other people, have a whole environmental situation, they have to overcome it. But don't feel guilty about your good luck if you've got, well, if you live in the United States, there are 8 billion people in the world, there's 330 million in the United States. You've already won the game to a great degree, and then just keep making the most of it. But you don't want to associate with people or enterprises that ask you to do something or tell you to do something that you shouldn't be doing. And that's one of the problems. That different professions select for different types of people. And it's interesting to me that in the investment business, so many people get out of it after they've made a pile of money. I think you really want something that you'll stick around for, whether you need the money. Greg doesn't need the money, and she doesn't need the money remotely. And that they enjoy what they do, and that's what they enjoy that. I've had the advantage of seeing how that works over time. The best manager I ever knew, and there's a lot of contention from but actually it was Tom Murphy.
It's really not working.
And I've never seen anybody that could get potential out of other people, more than Murph could. If you want to become a better person, you would work for Tom Murphy. There are all kinds of successful people, but that really don't have that sort of, don't bring that to the party. And I'm not saying that's the only way to succeed, but I think it's the most pleasant way to succeed, for sure. And I think that the Berkshire experience is pretty dramatic. I mean, to operate with Sandy got us from 1963 until we got her 2 years ago. Mortgage got 30 years. Like 25 years. Yeah, you really can't miss. You'll learn all the time, but you'll now learn how to be successful as business. You will not be successful at life. So that's my recommendation. And for some reason, apparently you live longer too. Pretty amazing. I mean, these people I'm talking about, including myself, I mean, you know, I like to attribute it to this. I think a happy person looks longer than somebody that's doing some things that they don't really admire that much in life. Okay. Move on to, I guess it's Becky next.
The first quarter ended March 31st, and it did show that Berkshire's cash pile expanded from the end of the last year, but the greatest market turmoil came in April. Martin Devine, a shareholder from Scotland who is attending the meeting today, wants to know, has the recent market volatility presented Berkshire with opportunities? And Martin just wrote in an addendum in the last 40 minutes or so, pointing out that you mentioned Berkshire almost invested $10 billion recently, and wanting to know if you could talk more about that.
Well, then, I can give you a good answer to the second part, which is no. But at 10 billion wouldn't have done that much, you know. That's the other side. That's another side of it. What has happened in the last 30, 45 days, 100 days, whatever you want to pick up this period is really nothing. There's been 3 times since we acquired Berkshire that Berkshire has gone down 50% in a very short period of time. 3 different times. Nothing was fundamentally wrong with the company every time, but this is not a huge move. The Dow Jones average hit 381 in September of 1929. It got down to 42. So that's like going from 100 to 11. This has not been a dramatic bear market or anything of the sort. I mean, I don't know how pointed out if I can 250 trading days a day, you know. However many years I've been old enough to trade stocks, 17 or 18,000 days. There's been plenty of periods just as dramatically different than this. I mean, the day I was born, the Dow Jones was at 240. And my first, that was August 30th, 1930. Between that and the low, it went from 240 to 41. I mean, that's, so, if people think that it made a really major change, it didn't. It's gone up 15%, it's still down 15%. I think that's with remarkable grace. but if it makes a difference to you whether your stocks are down 15% or not, you need to get a somewhat different investment philosophy. Because the world is not going to adapt. You have to adapt to the world. You will see a period in the next, certainly in the next 20 years, you'll see a period that will be somebody in the market described it as a hair curler compared to anything you see before. I mean, it just happens periodically. The world makes big mistakes. The surprises happen in dramatic ways, and the more sophisticated the system gets, the more the surprises can be out of left field. That's just, it's part of the cycle. And that's what makes it a good place to focus your efforts. If you've got the proper temperament for it, and a terrible place to get involved if you get frightened by market decline and get excited when the stock markets go up. I don't mean to sound critical. I mean, I know that people have emotions, but you got to check up at the door when you invest. Okay. Station 8, please.
Good morning, Mr. Lau, Mr. Greg, and Mr. Ajit. My name is Peter Chen. I'm from Shanghai, China. This is my first time attending this shareholders meeting. I would like to ask a question about the wisdom of life. Have you ever encountered any major setbacks or low points in your life? And how did you get through and overcome them? Thank you very much.
Well, everybody has setbacks, and some people have particularly bad luck in that respect, and others get through with probably minors. But Charlie, he had setbacks, I had setbacks. I mean, it's part of life, and they're not really fun. I don't have any great advice for you about having time in your life while you're having some major setback. But it comes with lifetime. You certainly have a setback when you die. So everybody's got that setback, guaranteed to them. And but some people get, and I mean, it isn't a laughing matter in a sense, because I mean, people get extraordinary bad luck, and other people get extraordinary good luck. Usually the people who get good luck don't really think it is so much luck as themselves, but you're just going to have it. I think that you're less likely to have it in terms of medical problems, in terms of, various things in life. I mean, you were born at a good time. You look all the way through the history of China, when would you ever have been born? 100 years ago, 500 years ago, 1,000 years ago, or now. It just hands down. You'd be lucky. I mean, if I came from 20 generations of shepherds, I think I'd get kind of tired of my life just looking at these sheep every day. But, we could sit here and I can watch Nebraska, not quite like the same game of football that we played 20 years ago, but I mean, everything in life has been made so much better that you've got to figure that you a lucky straw by, staying in the womb for a couple 100,000 years and then just emerging at the right time. So I would focus on the things that have been good in your life rather than
you sleep.
bad things that happen, good bad things do happen, but it's,
Put your hoodie on.
it can also be a wonderful life, and it can get terrible. So far that hasn't happened to me, but it's happened to some of my friends, but I think it's the best.
Oh, yeah. I'll have to a little bit more later. I'm still sending some friends stuff.
Drink whatever I want to drink. They predict all kinds of terrible things for me, but that's happened yet. And it's true, I mean, if you look at what pro football players are making now and everything compared to what they were making 30 or 40 years ago, you can say, well, isn't that wonderful? But if you look at the lifespan of professional athletes, after a while, I think you'd really decide that you're better off if you really weren't the first one chosen to be on the baseball team or the basketball team or anything else. The human body, Charlie and I think I speak to the others to some extent, they never really exercise that much. We're carefully preserving ourselves. So, look at the right side of things to the extent that you're lucky enough that you're here today, you're healthy, you're coming from a long distance, and you're getting a chance to learn more about something that interests you, and compare that with the situation a couple hundred years ago. So anyway, that's enough.
This question comes from Himanshu Gandha for Ajit and Warren. Autonomous vehicles are already driving across roads in American cities with no driver involvement. How do Warren and Ajit think about any disruption risk from these autonomous vehicles to Geico's auto insurance business, which is built around understanding and underwriting human drivers? Wouldn't what we call auto insurance today just become product liability for autonomous vehicles and autonomous software companies?
Yeah, there's no question that insurance for automobiles is going to change dramatically once self-driving cars become a reality. The big change that we will see is what you identified. Most of the insurance that is sold and bought revolves around operator errors and how often they happen, how severe they are, and therefore what premium you are charged. To the extent these new self-driving cars are more safe and are involved in fewer accidents, that insurance will be less required. Instead, it will be substituted by, as you mentioned, product liability. So we at Geico and elsewhere are certainly trying to get ready for that switch, where we move from providing insurance for operator errors and be more ready to provide protection for product errors and errors and emissions in the construction of
Yeah, we expect change in all our businesses, and good thing we did. And Charlie pushed me into it, but I'd settled for dealing with textiles, even though it worked well for 70 years or so prior there too. The world changes, and if the game didn't change at all, it would be very interesting. Every time you swung at a baseball, you hit a home run, the game would be every time you hit a golf ball, yeah, well, it would be interesting. So the fact that there will be things you have to think about all the time as you go along, and you'll make mistakes and all that. That's really part of the fun. I mean, your brain will turn to mush if you didn't have any problems now. So, auto insurance will change, although it's remarkable how little it has changed. But it's only been around since a small time. Who knows what we're doing to move in transportation 100 years from now? You go back a couple hundred years ago, we couldn't predict the United States would look like what it does. People would move like they do, and people would enjoy themselves like they do. And I mean, it's just, it's a dynamic world, and the biggest thing we have to worry about, unfortunately, is that we've learned how to destroy the world in recent years, and so we've got this wonderful world, which now we know that there are 8 countries, probably 9th coming on, can destroy, and we don't have what I would consider necessarily the first people leading each one of the 9, or some of the 9 countries. And when Einstein came up with the equals MC squared back in 1905, he didn't dream of the fact, I mean, that energy could be converted, mass could be converted into energy in a way that would change the world. When I was born in 1930, they had known about the law of physics that Einstein had come up with. 25 years earlier, nobody, to my knowledge, had thought, what can this do to change warfare in the future? And
You see, maybe this one.
it just wasn't thought.
The same effect that I have always made a mistake.
You should
How
buy.
to-
You should buy. They have a thing. You okay?
Is that the one you're using? You're using something? No. Oh,
But
okay.
I'm saying they have it on here.
Yeah.
I can make this camera even stronger.
Leo Szilard
Looks like, yeah, pixelated. It's a good shot.
But he got Einstein to
Mine
sign
is
it.
Mine is worse. Because that's
That's
model one.
So he didn't understand it. He understood that Einstein signed it. So he calls in General Gold, another general, and he said, we should do something about this. And what we did was learn how to destroy the world. And we needed to do it. Germany had Heisenberg. He looked like he was ahead of us. And what's that meaning back in the world? And the world does change. And we've got all these wonderful things, but we also have a guy in North Korea criticizes hair cutting, who knows what he can decide to do with it. What does North Korea need nuclear weapons for? I mean, can that be a good thing in the world? But they're not going to go away, so it's a world of change, and we are enjoying incredible change. It's contributed everybody in this room looking so much better than people were looking a couple hundred years ago. But we haven't been able to avoid. We haven't changed human beings very much so far. We've certainly changed weapons of mass destruction, and we haven't made much progress with the human race. And we'll see what happens with that. In the meantime, we'll see changes in auto insurance too, and cars, that will be more, it'd be easier for us to deal with it than it was when we had to deal with the problems of turning out textiles and you deal with the world as it develops. And like I say, everybody here is looking at the hopeless period. But enjoy your luck. And you still trying to figure out the answers to what's going to happen. And all these questions that go along, and we've done pretty well. Actually, get happy with the answers. There's a few big problems in the insurance. And I don't know how the insurance industry has to be. That makes the game. You really don't, you wouldn't want to go out like all.
I'd just like to add, you talked about the shift to product liability into protection for accidents that take place because of error of product supply. The only thing I want to add is, in addition to that shift, I think what we'll see is a major shift where the number of accidents that take place and need to be provided for will drop dramatically because of automatic tracking. But on the other hand, the cost per repair, every time there's an accident, the cost of repairing and bringing everything back to where it used to be would go up very significantly because of the amount of technology that's going into the car. How those two variables interact with each other in terms of the total cost of providing insurance, I think is still an open issue.
I'll give you two interesting figures to ponder. When I walked into Geico's office in 1950, the average price of the policy was around $40. It varies a lot, depending on location and everything, pretty easy to get up to $2,000.
How to get down on that?
Considerably higher. During that same time, the number of people killed in auto accidents
I didn't see that.
have fallen from roughly 6.
From this, I work here.
Cars are becoming incredibly safer. And it costs 50 times as much now, or thereabouts. My insurance policy itself. When people talk about developments in car driving and all that sort of stuff, it's a lot easier sometimes. I mean, the Buck Rogers aspect of it. People look at it, they don't actually think of what really happens to the math of the business. Insurance, auto insurance industry has been a huge growth industry. And for that matter, homeowners insurance prices in Nebraska have doubled
Yeah.
in the last 10
And then
years.
go there. And then
Adjusted
back.
for jungle and
And it's around.
convective storms, you know, it just gone on a tear, and it's still unprofitable to buy homeowners insurance in Nebraska after doubling the price in the last 10 years, so it's very
That I
hard
will
to
be easy again.
what these big changes to be, and you just got to changing over time, but you don't want to read some research.
I wanna go down to have proper photos. What?
You want? You never reach an answer in this business. You reach a point of action. We try to get into as high
Because
possible.
there is gonna be anger. This one.
That's okay, you both can go. It's better you both go at the same time. Just
Yeah,
leave it,
just
whatever
the
you
same.
leave something.
Okay, you go first. I'll leave my coat. My coat is here. I leave my coat. I leave my coat.
Oh, yeah. Yeah, let's put up the, we released our 10Q this morning. And, we'll try to do it on a Saturday so nobody gets a jump on.
Sorry.
That too simple. You'll see that, our insurance underwriting income was down dramatically for the first quarter. And last year was as good a year as you'll see it. It's always unpredictable insurance, but everything broke our way. Or the insurance industry's way last year. Prices are down this year. Risks are up this year, so you don't have to